You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, traders and investors. Quasar Markets Live. Welcome. How are we doing? We're going to break down some of the biggest stories driving Wall Street this morning. My main band, BigBeat, still on a cruise here today. So I am Howard Greenberg. I'm here solo for us till about 9:45 when our main currency man there, Mr. Currency himself, Stephen Flanagan, will be joining me to break down everything on a macro level. We got a packed hour to talk about here. We got U.S. credit downgrades that do seem like they're moving the markets a little bit. I didn't think I said it was pretty much a big nothing burger, but I don't know. It seems to be weighing on the markets personally. I do think it's having a little bit more of an effect than I thought. And part of that is by the breakdown that we're seeing in the bond yields and the treasury rates that are also getting impacted, and all of that working sort of in tandem. We're going to talk a lot about retail earnings, Target, TJX, how they did. Well, not very hard to know, not very well, or at least their stock performance not really that well. We'll take a look into what their earnings reports and guidance can tell us. We saw some of the tech names. Palo Alto hit a margin miss here. We'll talk about that. I'm going to talk a little bit about valuations there. I've mentioned this a lot. I personally do still take fundamentals. While I'm a technical trader by heart, I do use fundamentals a lot. And I do have a nice little breakdown here, sort of comparing Palo Alto and sort of their financials next to NVIDIA's. And the same thing, I've sort of looked at Targets versus TJX's. So we'll talk about that a little bit. Got to talk about Toll Brothers, their home building strength. They had their earnings. We did see everybody, the S&P snapped its 6-day win streak yesterday. And so far, we are seeing a little bit of a downward move to start off with, or scheduled to open with a downward move. SPY right now set to open down. Both of them, SPY and Qs. You don't see that very often, exactly at the same rate, 63 basis points to the downside. So yesterday, both of them finished almost in tandem, down 34 or 33 basis points, depending on which one you were watching. Same thing, Dow Jones down about 27 basis points yesterday. So what we did see was everything sort of moved in tandem there. My biggest takeaways this morning as I'm starting off is, take a look at Bitcoin. 10652 on the low side of the day, broke up to a high of 108,035 overnight. It's eaten up that sell wall that was at that 16,000 level pretty well. Now the question is, do we see that 16,000 act as true support on Bitcoin? That's what I'll be watching today. If we can hold above that 1600 level, 106 level, I keep saying 1600, 106K level, that would be huge for us. Got to ask any of my crypto folks out there, you think we're breaking to an all-time high here? Or do you think this resistance at 108K is going to be the spot that knocks us down again? Been pretty tough so far, but like I said, broke nicely through that 106, and then 107 had really become the spot, broke that down pretty quickly, and now 108. Seeing a flight to safety is what I'm talking about a little bit too. Gold back above 3,300 here. You can see a 3-day win streak here on gold, and really a 5-day sort of win streak from the lows of 31.24 that we hit on the 15th up to where we're at now, 3,300. So we are seeing a little bit more of a flight to safety there. And we do see the VIX up about 5.53% today, breaking back above 19. Those that watch, though, know I don't really care until it breaks that 20 level, is where my, ears sort of perk up after 20, but we're not there yet. Tick so far starting off fairly negative. We're down about 107 currently. We've been down most of the day, and advanced decline, which we know is the amount of stocks that are set to open on the downside versus on the upside. Right now, pull that out. We can see we're down about 891, and we've been sliding throughout most of the trading session since about 8 a.m. So, most of the news, in my opinion, is going to be based upon what's happening with the budget bill, budget bill, budget bill. I do think that's where most of the focus of the president seems to be. So tweet analysis, I think, will be based mostly on that. And then, that's the biggest thing to sort of keep an eye on. There are more things that Moody's downgrade still on people's minds. Mag 7 getting hit hard. We're going to talk a little bit about that again, like I said, in the tech sector, but NVIDIA down about 77 basis points. Apple down another half a percentage point after losing almost a full percentage point yesterday. Google was down about 1.52% yesterday, up a little bit today. Amazon, again, continues to get hit pretty hard, down 1% yesterday, down 1% in pre-market trading today. The one that is moving back up a little bit, Tesla, Elon Musk on CNBC yesterday. I didn't really break that down much. My man Jay from Tip City gave me some highlights, but I honestly haven't had time to really digest what was there or what he said. So I will look at it more. And part of the reason I'm not as much of a rush there is I care more about earnings reports or things on the record, so to speak, to the SEC versus just comments. So that's what I sort of am more geared about looking at today. Like I said, the top story really still is Moody's downgrade. I didn't think it was a big deal. They cited the debt to GDP ratio at 123%, up from 92% in 2011. Reuters reports the dollar weakened. 10-year Treasury yield spiked above 4.4, and we can see that 10-year right now at 4.537. 30-year at 5.02, again, continuing to climb. All of the main ones that I watched, the 2-year, the 10-year, the 20-year, and the 30-year, all moving to the upside here today. So again, we're seeing a little bit of a flight to safety across most of the market here. So that's, right now, that seems to be the path of least resistance currently. Like I said, SPY down about 60 basis points in the pre-market, reflecting sort of the broad market jitters I'm talking about. We're seeing the PE ratio there on the S&P now pull back down to about 19, which is pretty much in line with the 10-year average. So S&P is, in my opinion, fairly decently valued right now. The one to keep an eye on here also, which I don't know why I don't have it on my watch list. I do need to add it, which is, well, because I look at the bonds directly, but TLT tracks 20-year bonds and above, so anything above the 20. And again, we see that it spiked up yesterday pretty hard, pulled back this morning, and now it's starting to move back to the upside here. So we are seeing a little bit more of a movement there. You want to stay on advanced decline here during the morning. Advanced decline just dipped a little bit more now, down 927, 929. So we are seeing a little bit of a broad market sort of pullback here today. Like I said, you see it mostly when looking at the S&P for sure. For it, our questions we got to talk about or wonder is, will these rising yield crush the tech sector? That's usually the sector that gets hit the first. I did notice that it wasn't too bad when we were looking at XLK here, which is the tech sector. It had a slight pullback here, 231. But again, we're not looking too bad. You have your high to worry about, your all-time high, 242.71 here, and we're at 231. So not too far away. To me, that's a pretty healthy retracement, and now a nice move back to the upside. We do have a little bit of a topping formation on the daily chart. Short-term chart definitely looking negative here today. And even on the hourly chart, we see that we've sort of been working our way down slowly here. On XLK here over the last 2 days or so, we've just been sliding down to the bottom of the range. Let's see if we get some good support at that 230.39 spot. That would be what I'm looking at here this morning on the tech sector. Next thing I wanted to talk a little bit about was retail sales today. And first want to talk about here is Target. They are down, and they've moved even more from here, down about 6.78% now today. So you're looking at them to open up somewhere in this $91 range, not as low. I mean, their 52-week low is at 86.36. You could see that dip down to that level here today. It has just moved tremendously to the downside. Uh, broke down, already filled the full ATR to the downside here. So play now is more of, do we get a bounce back? It's one I'll be keeping an eye on here today. We'll look more into their earnings reports a little bit, but Target definitely getting hit hard. TJX, not quite as bad, only down about a half a percentage point, and it's really a tale of two charts, right? Target has just been in this decline. If we look at this daily chart, it's just not good on Target. They were trading at one point, pretty consistently hitting highs in that 160 to 170 area here, going back starting in August of last year and trailing back all the way here through 2022. And coming out of COVID, we know that they hit highs at 238. Now we don't expect to hit the COVID numbers, but you would, like to see a retracement back up to these levels. Question is, does anybody have faith in Target anymore? I know Steve doesn't. I know my family, being the wife and little one, love going to Target and do buy a lot of crap there. um, you know, I tend to think that they have a pretty good model, but their stock doesn't justify it so far. You start to wonder, where does the bottom? And now at $44 billion, does this become a target for somebody like Warren Buffett or somebody else to come in and say, you know what, Target has a great brand name, everybody knows it. Can I do something with it, like what we saw with Foot Locker recently with Dick's buying that? Do you see someone go after Target? It would probably be one of the questions to keep in mind. And if I break down a little bit more on those retail sales, sorry, just trying to find my notes here. So Target reported their Q1 2025 earnings. They missed their EPS by about 5 cents. They were expected to come in at $1.74 a share. They came in at 169, and a revenue miss of about $1 billion. They were looking to come in at, or excuse me, 100 million, looking to come in at 24.5 billion, came in at 24.4. They had weaker than expected same store sales and full year guidance. So again, and they talked a lot about the boycott activity over their DEI initiatives, and tariff concerns as additional pressures. And now that, their PE ratio, like I said, that thing's come down to 16.5, which is relatively low for retail. To me, it suggests maybe some potential value here in Target if sentiment can start to improve. Their revenue growth, though, in Q1 was down 3.1% year over year, so reflecting some consumer spending slowdown. Their dividend yield is about 4.5%. And attractive for an income-focused investors might be, another reason why, as a value play, I like Target. But, you want to keep in mind that they still, have risks ahead of them, consumer weakness and tariffs impacts. And UBS estimated that 50% of the retail products that Target does sell face tariff hikes, which could put further pressure on their margins. But again, the high dividend sort of, or could offset some of that with it. Let's see here, compare that to TJX's for you. Sorry, when I'm solo here, finding my notes takes a little bit of time because I don't have Steve to be yapping away while I look for it. So give me 1 second here. Here we go. So TJX companies, let me pull up their stock here, which as we can see now down almost a full percentage point. So it's getting hit a little bit here now, 133.60. So as people are digesting and listening to their stock reports, maybe a little bit more downside here coming on TJX. Their revenue, their PE ratio. So to tell you a little bit of the difference there, like I said, between Target and TJX, price to earnings ratio is about 27 right now. Their revenue, they did have growth though that we want to see. So a tale of two different stores. Quarter one sales were up 6% year over year. Quarter four 2025 sales of 16.35 billion beat the estimates at 16.2 billion out there, and analyst sentiment is pretty bullish there. UBS rates buy for vendor network strength. They have 21,000 vendors that they get this. Their off-price model sidesteps some tariff costs, but economic uncertainty caps gains, is what the CEO had to say there. And then I had, like I said, a little breakdown here I wanted to look at between the two. So, comparing the two, Target just ended with an EPS of about $1.69. TJX didn't. Their EPS came in. They haven't actually hit it yet. It hasn't hit here yet. But their EPS is looking to come in at only 90 cents a share. So again, EPS actually stronger when we look at Target versus TJX. The price to earning ratio, you're looking at about 16 on Target. You're looking at about 27 on TJX. Here's where the difference starts to move in TJX is though performance. Revenue growth down 3.1% year over year when it comes to Target, plus 6% year over year when we're looking at TJX. When you look at some other key financial metrics, you do have a 4.5% dividend yield that you get off of the 440 annualized dividend, and same store sales missed expectations, whereas in comparative sales forecast is plus 2 to 3% for fiscal year 2026 for TJX. So they're expecting to see same store sales move to the upside. And again, one of their big key metrics is they have 21,000 vendors that they get to pick and choose across when they're trying to, avoid these tariffs. So they'll be able to do it. We do see mixed analyst sentiment. We see that UBS has cut actually their price target to 110 from 120. Target trading right now under the 90, right around the $90 level. So still much more room to the upside there. And then UBS rates a buy on TJX based upon their tariff resilience. So we'll see which way this does. And again, it's basically a tale of two stories. Do you think the high dividend yield and the size of Target is their benefit, and that tariffs are going to get lessened or come off, and therefore they would jump back? That would give you your idea there. Or do you think that the off-price model that sidesteps these tariffs is going to give legs to TJX out there? So that's the question we have in front of us to keep an eye on when it comes there. Let's take a quick look here. We're about 10 minutes from the open. Tick still negative. Advanced decline continuing to slide now 1,200. So it's moved down another 400 since we've been in the room. Gold continuing to move to the upside, and now 33.05 since we've been in here. Bitcoin pretty steady at that 106.4. Hasn't done really much. It's in a fairly tight range here over the last 3 hours or so. And again, oil moving up. Commodities all, getting some headwinds out of what's going on here. And as I look across my main players, the majority of them are in the red. You do have some names in the green. When I was looking here this morning, at pre-market movers, pre-market gainers that I care about. Again, I won't talk much about health and technology companies because there's just too many variables there to worry about with where they are in clinical trials and FDA and all that. Weibo, nice move up here, 4.28%. I definitely had notes on them in here, but they had their they just did their earnings. You want to pull this up here? Hold it 1 second. Where are my notes on Weibo? I hear Kramer yelling into there. I can just look at this. That doesn't give me much. And here we go. Weibo's more than doubled their quarter 1 profit. They recorded a rises in attributable net income in the first quarter, 107 million from 49 million a year prior. Wednesday, flying with the Hong Kong board, said earnings per share rose to 41 cents in the 3 months from 19 cents in the same period last year. The Chinese microblogging site's net revenue grew 1% over that time. So Weibo, one of the winners there. There was talk also about the increase in the amount of their users. We'll point out, though, that one thing you have to keep in mind is that this is not an audited report. So I don't take a lot of credence into these. And those that have been watching the show for a while know that I tend to short these Chinese names when they blow up like this. When you see Weibo, Li, XP, some of these others. Not saying that I'll do that today, but that tends to be the way that I play them. Other things moving to the upside, like I said, Li Auto, XP Inc., a lot of the Chinese names, We Ride, moving to the upside here, about 2%. We are seeing RTX Corporation get a nice little move up, about 1.59, Lockheed Martin. So we are seeing, again, as nothing really came out of the president's discussion that we know of so far with President Putin yesterday. It was, again, that was part of the positivity in the morning, is that they had this huge phone call. Supposedly it was, went really well, all this stuff, but we haven't really seen much movement there. And when it comes to the Middle East, that seems to be deteriorating even more. There was rumors of Israel maybe bombing some of Iran's nuclear facilities, although I don't believe that was ever confirmed. But there's definitely Europe putting more pressure on Israel about the Middle East. So without a doubt, we're still seeing issues there. And again, we're seeing some of those companies that tend to be the defensive names moving to the upside. AI still getting some love here today. Pony AI up about 1.01% also after their earnings yesterday. Those are the big ones that I saw here. Again, Baidu, another Chinese company, up about 1.4. So Chinese companies moving up. Defense contractors like RTX, Lockheed Martin getting some love here today when we looked at sectors. And then the Chinese names seem to be booming here today. On the other side of that, if we look at the pre-market laggards, and we're about 4 minutes from the open, Target leading the way down about 7.2. We'll have to talk about United Health, man, down 5.91% here. And that was based upon some downgrades that came from some of the analysts. As I mentioned, we want to talk, and we'll talk after the open more, a little bit about Palo Alto and their earnings reports. They're down about 5.5%. And again, those that were listening to me yesterday, pretty much what I said, good earnings, but not good enough when you compare it to their earnings, to their PE ratio and all of that. They missed their Q3 margin. They did beat their EPS here, and we'll talk more about PANW, Palo Alto, because I'm going to talk about it in comparison to NVIDIA a little bit. And again, like I sort of broke down the differences between Target and TJX. I'm going to talk about, two of the biggest high-flying names that are out there when it comes to that world of software and tech, and compare them a little bit. We also see mineral companies getting hit kind of hard here. Phillips 66. Solar still under. Yesterday, I was thinking about buying solar dip. Luckily, I did not. As we see First Solar down another 3.36% here. And again, some of the other healthcare names getting hit on the news across UNH. The other one, again, I did not. I liked the idea of maybe buying the dip, but I didn't buy any dips yesterday on RCL and the cruise names. As we know, RCL is where Steve is right now, cruising around. Yesterday, it was down in the pre-market. Did bounce back from that level, but again, not really that great, down about 1.934% over the last couple of days. Question is, does support in this 245 area hold for play to the upside, or do we see us fall right back down and maybe even fill this gap here? Is what you got to start to say. If there's more problems out there, if gas is going up, or oil is very important to them. NCLH was another one that was down yesterday about 4%. We've seen it down another 1.54%. So now we start to get to the areas where I am interested today, maybe in buying the dip on an RCL 1789 here. I'd like to see it more in that mid 17 area. You can see in the green here on the left side of my screen, but at that spot, I could definitely be a buy the dip player there. We're 1 minute from the open here. Take Two Interactive getting hit again as they have more details came out about the delay in their, in GTA not coming out till May of next year. So we're seeing some hits there. Like we said, TJX and retail getting hit, and then a lot of electronic technology companies getting hit today here. Let's get ready. Let's be watching the cues here on the open. Before the open here, we're trading right about that 516 level. SPY right now trading at about that 588 level. So those are the things we'll keep an eye on. We are open. First move seems to be the downside. Dow Jones opens up down about 85 basis points here this morning. SPY down about 70 basis points. Q's down about 70 basis points. RUT small caps, the one that would make sense, get hit the most. First of all, they were up yesterday, one of the only of the major indices to the upside yesterday. Now getting hit down about 1%. Ticks negative about 490, 500 here. Advanced decline down about 3,853. So we're seeing an imbalance of things opening to the downside. Dixie dropping here too, back down a little bit here. So Dixie getting hit a little bit here. This morning we'll come back down to the lows near 99.50 is what we'll have to ask Mr. Flanagan. VIX at 19.26, so a little bit more of a jump up, even 6.53% to the upside. So volatility ticking back in. Bitcoin's first move back up above 106,500 here. Nice move to 106,600. So I like to see that there. That's a nice little jump right on that. Ethereum holding 2,500, pretty positive there. Also here this morning on the open. Gold 33.05, not really much of a move on the open. Qs are starting to slowly climb. Like we said, we were down about 70 basis points and trading about 516. It's gained about $1 from here, as you can see, and now Algo's pushing it to the upside. We look at the Mag 7, NVIDIA bouncing back up a little bit here this morning. Nice little climb. Algo's definitely trying to push that back up to the upside. Looks like it wants to challenge back into that 135 area here pretty quickly. So highs of the day here, or highs of the morning here on NVIDIA as we take off. Was down as much as 1% in the there. We'll mention that their earnings will be coming exactly 1 week from today, the 28th. So keep that in mind. Apple down another percentage point here. They were down even further earlier here this morning. Google that got hit pretty hard yesterday, moving to the upside here today. So Google getting some love. We are seeing a nice little run to the upside so far. Qs now have gained 20 basis points since the open on this move to the upside. SPY, same thing, gained about 20 basis points on the move to the upside so far. VIX pulled back down below 19. Love to see that. Okay, let's get some calming down here. Gold still, though, rising a little bit, 33.08. Bitcoin, same thing, rising a little bit. So we are still seeing a little bit of a move out of equities and into commodities and crypto here so far. Ticks just went positive here, so maybe we get some buying coming in. Advanced clients sitting down about 36.59 so far. If we look at the broader market, all of the different segments of the SPY are down today. All of them except for XLU, it looks like down, which is the utility sector, down about a half a percentage point, if not more, here. So broad market pulled to the downside. These are the ones where we tend to see, in my opinion, a reversal. Let's see if we can get that throughout the day. But, not everything should be moving down all at once. And VIX shouldn't be moving down with it. Although I guess it's all one directional moves. Just trying to see what moves here. Let's see what's pumping here in the So we ride up 8.61, so we are seeing the Chinese names continue to move up. And we ride did announce that they're expanding their robo-taxi. Here you go. We Ride's going to expand their robo-taxi services to 15 more cities in an Uber partnership. We Ride said Wednesday that it will expand its robo-taxi services in extended partnership with Uber following the deployments in Abu Dhabi and Dubai. Deal includes $100 million equity investment from Uber, with WeRide's vehicles integrated into Uber's app and Uber handling local fleet operations. WeRide said it also launched 24-hour robo-taxi routes across central Jiangsu, making it China's first 24-hour autonomous ride-hailing network. WeRide began driverless testing in Abu Dhabi and introduced its first paid robobus route in China, while expanding internationally in Singapore and France, the company said. So again, nice move here by WeRide overnight this morning. Tick pretty flat here, still sitting advanced decline right around the same area. Qs, like I said, stalling out right near this 517.50 area. Tried to get up to 517.80, rejected there, and continuing battle in that spot. So holding up and not moving. Same thing, gold 33.07, Bitcoin 106,600. So pretty flat in general here so far on the open. Pretty muted open here. Yeah, very muted open. Okay. Just trying to see if we get Bitcoin trying to bounce back up. VIX trying to challenge back into the 19 area here. 517.50 still the key resistance on the Q. SPY 589. Did have some other good movers here this morning. Toll Brothers was up about 4%. Let's see if that's continuing here. No, they've pulled back pretty much. And again, if we look at Toll Brothers, they reiterated their outlook for the full year despite soft demand in the latest quarter. CEO said long-term trends for its luxury homes remain positive. They're based out of Pennsylvania. The home construction company on Monday said it continues to expect to deliver 11,200 to 11,600 units this year, with an average delivery price. And again, Toll Brothers, a luxury house building company, right around just under $1 million. Their chief executive said the company continues to believe the long-term outlook for the new home market remains positive, particularly for its luxury niche, given a housing shortage and favorable demographics. Company posted a profit of $352 million or $3.50 a share. But that's down from a year ago where it was $481 million in revenue and $4.55 a share. Revenue fell 3.5%, which was better than was expected by analysts. Home sales revenue rose 2.2% to $2.71 billion, partially offsetting an 83% fall in land sales. CEO said the company saw softer demand environment in the quarter, and they guided for deliveries of about 28 to 3,000 units, and an average delivered house, like I said, just under $1 million. So for the luxury home builders, looking better than others. But again, and now up 1.23%. So it's starting to move back to the upside here on now as it's getting digested. It had dropped, you can see, significantly, finding some buyers here in that 103, 104 area. UNH, as we mentioned, got a downgrade, has them moving to the downside another 5%. HSBC downgraded its rating and cut its price target. And we know that they're still, under pressure due to the Medicare issue 2 DOJ investigation there. Tick still saying pretty negative. Advanced decline down 3,800. Q is still sticking in that 517 area. SPY, same thing, sticking right below 590 in that 589 spot. So not really much of a movement one way or the other. We do see a little bit of bounce back here now by the Dow Jones, down about 80 basis points, but it was down even more, almost down a full percentage point before. So it is seeing a little bit of love come back in. The RUT was down and trying to move back up, but so far not really a ton of movement one way or the other. Gold challenging to go maybe under that 3,300 level here. Bitcoin back up at 106.8. So we are seeing still a lot of movement there. Dixie has bounced back up to the upside here since the cash market opened, now back at 99.64 or so. So we'll get a little bit more insight there with Mr. Flanagan in a few minutes. Again, most of the things that I see moving to the upside are Chinese names. Coinbase, though, crypto names probably moving to the upside here, if I had to guess. MicroStrategy, actually not really. It's a mixed bag. You see Coinbase up about 0.5 point, but MicroStrategy down about 31 basis points. The Bitcoin mining companies down. They did have strong days yesterday. I mean, Mara moved up nicely yesterday, back up towards its highs of the recent week before dropping back down. Chip sector is a mixed bag. We do see broadband, ASML, and AMD with a little bit of a move to the upside, 0.5 percentage point to the downside on NVIDIA. Texas Instruments down, Qualcomm down, some of the others down. Marvell had gotten hit pretty hard yesterday. Let's see where it's doing now, down right back down around that 60 level. So Marvell continuing to struggle when it comes to chips. Financial sector in general, mostly in the red also. So again, a lot in the red, not much in the green so far. One that is significantly up here is Goose. Canadian Goose Holdings here is flying. They did announce earnings. Whoops. And I'm just trying to find that earnings report here. That up my notes. They hit a Q4 EPS. They beat it by about 10 cents. It was expected to come in at about 23 cents. Came in at about 33 cents on their Q4 EPS. And their revenue came in at $384 million versus an estimate of $356. Their price to earnings ratio right around 30%. and they had strong earnings, but they gave no 2026 outlook due to the tariffs. Not too surprising there. Moving up nicely here. Lowe's was another one that had decent earnings here this morning. They were up. Let's see if they still are. No, they're down now, down 1.5%. So Lowe's was another company that had pretty good earnings. Grab my notes on their earnings. Come on, Lowe's, where are you hiding here in my notes? Oh, here we go. They came in at EPS 292 versus 288 expectation. They came in right at estimation here. Their price to earnings ratio now about 18. Revenue growth -4% year over year, but they did reaffirm their full year sales growth outlook and are resilient despite tariff risks. Home improvement demand is holding up, they said. So that is one to keep in mind. Okay, we're starting to see the Qs move now to the upside nicely, 518.50. So here we go. Here comes some buying into the market. Qs moving nicely to the upside here. Key resistance is that 521 level to keep an eye on. SPY also now moving back to the upside nicely. Key resistance to keep an eye on there is 595 on any move up. So seeing love here. Ticks moving back up. Mag 7's got to be moving. Yep, we see them moving back to the upside now. NVIDIA at 134.20. Nice move to the upside here since the cash open battle and up towards the high of the day. Apple still down about 83 basis points here. Microsoft down about a half a percentage point. Google, the big winner so far in the Mag 7, up about 1.64 after a rough day yesterday. Meta, Tesla, Netflix also in the green. Trying to see if any of the sectors. We're not seeing any of the broader sectors yet, though, ready to make a move into the green yet. Closest looks to be utilities and communications. So we'll see if one of those can move to the upside here and bring the market with it. Palo Alto now down 7.71%. So it looks like it wants to buy. It had bounced back, found some buyers, continuing to move now back down to the downside here. Bitcoin, there it goes, 1072. So here we go. We're making another run up again. Made it to 108.035 earlier. Looks like cash market ETFs are pushing more. We're getting some FOMO here. Could see a squeeze to the upside towards that 109.356 area. That's what we're looking for today. Move to the upside towards that 109.356 area. And again, now most of the crypto stock names moving to the upside. Bitcoin miner Mara up 1.17, CleanStark up 3.2, MicroStrategy now moved to the upside, Coinbase up 62 basis points. So as Bitcoin gets a little bit more wins, high of the day, there we go, high of the day. When I say did, I mean our cash market trading, it actually did hit 108.035 overnight. But so far in our cash trading hours, which is the ETFs, moving it to the upside here. So we definitely could see a bigger move to the upside We'll say that overnight we did see open interest pick up slightly, reflecting some sustained trader interest, which definitely shows it. Bitcoin futures open interest is rising tremendously, driven by that spot ETF flows. Yesterday we saw about 26.7K Bitcoin scooped up. Funding rates have moved positive, but they're moderating, indicating longs are paying the shorts, but not at extreme levels here. So again, there is more room for liquidations to move to the upside on any kind of significant swing here. We saw short liquidations occurring last night in between. Got about $405,000 of them. 158 million of them were Bitcoin liquidations over the past 24 hours. Shorts took a little bit of a heavier hit as Bitcoin made that move to 108. And again, as we talked about, spot ETFs saw an increase in inflows yesterday, people buying, retail buying, institutions buying the ETF, but there were no specific large buy or sell orders in the last 12 hours that I saw. What we are seeing is a huge amount of liquidity trade hands in between this 106 and 107 level. So you want to keep that in mind. And our key resistance is going to be right around that 109, 350 area. So any kind of break above that, watch for a new rally to definitely kick in. We are seeing us blow off top here, kind of blow to the downside now after making that first move into 107 territory. 107, 250 still holding up, but we'll see if we can get that extended move to the upside here. Again, the first key area to watch is 107, 800. Break above that will hit us some liquidations. We're not seeing that spike like we are in crypto across the Qs, though. Tech not doing quite the same thing while we're at the highs of the day, that 518.70. We are breaking to the highs of the morning here, 518.80. So actually we're seeing both tech and crypto move together. Seeing a little bit of a sell-off off of gold back towards that 3,300 level. And there the Qs go, trying to break the 519. Still haven't seen any of the sectors of the S&P that move to the upside. Ten-year cooling off a little bit here. 30-year still above the 5 level. Bitcoin China, here we go. Bitcoin can break right here. Watch for a move to the upside. Biotech's the biggest gainer on the day so far. ACLX, like we said, we ride moving up. Core weave up about 7.69. Not seeing a ton though when it comes to a lot of biotech names moving up, a lot of Chinese names moving up today. Do see SMCI, nice little rebirth here, up about 3.3%. Again, Google up 2.23%, moving the Mag 7 up nicely. Not a ton there, not a ton. Let's see about the laggards here. I do see Mr. Flanagan is joining us in with his new fancy back screen there. So I love it. We're going to bring him on here, talk about what's going on this morning. Mr. Flanagan, how are you doing today?
Good, working on a background.
I love it. I love it. I love seeing all those currencies behind you. Little bit, we talked about it on Monday. we had to watch out below, it looks like, on the Dixie, and it did move the way you thought you might see a short-term reaction there, huh?
Yeah, a little bit more powerful than I thought, but then again, the tariff, sell dollar, buy the yen. You can watch the yen, down around 143.80 now. The euro dollar, you had Christine Lagarde come out on Monday actually saying, very unusual for a central banker to respond on currencies, but kind of saying, well, this is the stronger euro is a sign that the world sees the euro as some sort of stability and strength, kind of a shot across the bow of the U.S. at the same time, perhaps masking all the concerns that the European Central Bank has about the strengthening euro and, hiding perhaps a larger problem out there. But no doubt, the dollar, in an absence of new news, it's just like a ball coming down the hill. And once it starts rolling, same thing in equities, same thing in all the markets. In the absence of new news to dig your teeth into, it's just going to keep on going. So, we're at 99.60 right now, and, we're right in the zone of some serious support, anywhere between 99.50 and 99.00, what we call the figure, is a very strong base of support. I would think that you would really need negative news to break us through that. But anyway, that's the currency market. Quiet, but
yeah, I want to break down a little bit. Like you said, Christine Lagarde noted the dollar's decline against the euro reflects uncertainty and a loss of confidence in the U.S. Fiscal policy. She also came out and said that the euro strength, so I have to ask, is the euro strength a short-term reaction or a longer-term trend here?
Well, I'm going to right now say it's a short-term reaction. And again, for our viewers, we got to understand $7.5 trillion in one day. And about 50% of that is, maybe about 45% of that is the euro dollar. So where is the liquidity in the world? If it's not the dollar, it's the euro. If you need to get out of the dollar and the market views the tariff and the lack of progress in Ukraine, Russia, and the lack of progress in other areas as a negative knock, the lack of progress on the budget, get me out of dollars, I buy euro, sell the dollar.
And we are seeing a little bit of a flight to safety, right? Gold started to pick up a little bit, Bitcoin tremendously. Oil, commodities in general were moving up a little bit too as money's coming out of the equities too. So do you see that again a little bit? Like I talked about, I didn't think this was, we talked about two things. There was equal weighting up and above, above and below us where we could go based on this news. And we didn't really move all that much, in my opinion, but it's more about the trepidation that I see in traders.
That's right. And we talked as the stocks market, the equity market was beginning to advance. We highlighted the dollar has not hit the breaking point where I would say we're going to see that follow through. What this is evidence of, and look at the yen down at 143.80, it is a very slippery slope for the U.S. asset base to recover. Now, I'm a little surprised that the equity market's held up as strong as it has, which could mean that the currency market is kind of wrong here, and you want to be watching it very carefully. We're now getting into the hard part of my forecast, end of May, early June, where I see everything beginning to turn. More positive news to come out. Given the currency market's levels, watch, it's going to be a very sharp turn here.
That two things you just hit on there that I wanted to bring up that you said. Safe haven seems to be back in play a little bit, right? The yen, CHF there. And then you hit the other part is, but that you have to be wary because, we saw the bond guys got it wrong recently, right? A few months ago, they were all on the wrong side there. So I do want to point it out that, none of us are always perfect. And even, the currency market could be on the wrong side. We saw it with the Japan carry trade right at one point. Bond markets have been wrong. We've seen the equity guys have been real wrong. Most of the hedge funds we know were on the short side when that big, spike came, there. So, it shows you that even the pros right now are having trouble digesting all this data that's coming in, right?
Exactly. And, again, highlighting the markets are dominated by computer models today. So if an algorithm doesn't begin to get a next price higher, the algorithm will automatically say, well, if it's not going higher, let me try selling. The next price is lower. It gets a reward and a confirmation. It sells again. Next price is lower, and onward it goes. Again,
Right.
Markets today come as evidence in the currency markets, and that's why I emphasize money moves first, because the algorithms dominate the trading today in currencies.
Yeah, absolutely. Steve, you watching UK inflation data today? I don't know if they released it yet.
Yeah,
I know
they
that's
did. It was higher, 3.5 year on year in April, up from 3.3. And now
they were looking at for like 2.2, I think.
Now gets the difficult part. You're beginning to see an edge up and a monthly, and I emphasize monthly number. That doesn't mean a trend.
Yeah,
but
not yet.
And now the central banks who have the EBGBs over inflation, right? Like the Fed, the ECB. You already see ECB people coming out saying, well, maybe we're getting close to the low here in interest rates at 2.25%. And suddenly everybody's now worried, oh, inflation here. It's not coming back. Look at the price of oil. Let that be the driver. Oil isn't everything. It's come, and don't look day to day. Look at the big picture. Come from 75 down below 60. It edges back up. Let's see what happens here. Everybody's going to hammer on the tariffs right now, but the tariffs are in a 90-day window where it's been all dropped back. So, I don't
think they have to be, though, because they're hearing it from all the CEOs. And what I warned about, right, that was if the CEOs don't, get behind the administration and they continue to just hammer that I can't give you any kind of guidance because no one's giving me guidance, that it would cause some of this uneasiness. And we saw it with Target today, TJX, or some of the retail that even had good earnings getting hit here because they can't tell you what's coming. And especially ones, it's a tale of two stories I brought up this morning between Target and TJX, because TJX as an off-brand retailer, they have 21,000 vendors that they kind of pick and choose from, which gives them a big advantage over Target. They get to over 50% of their stuff from the hardest hit tariff companies, countries. So we're going to see that play out on some of these. Jamie Dimon 2 days ago, he wasn't very friendly to the administration with what he came out with, right? And it was funny. I didn't even know he was speaking, but I said, if you remember, that he just seems to be the one that, he was the first to sort of throw a jab at the president and say, hey, here's what's coming. And he really said, and I don't know enough about credit spreads, but he seemed to be very alarmed about credit spreads. Did that catch you at all by surprise, or do you have any concerns there?
Well, I think if we take him in the whole, he's been honestly nothing but warnings for the last year now, right?
Yeah, he was during COVID. He was the exact opposite. For me, he was that warning guide, Uncle Jamie, that would sit me down at the fireplace and say, listen, here's the reason we're not going into recession. But he seems to be really negative lately.
I wouldn't call it negative. I think, just
pragmatic. I mean, he's just warning that, again, I think he's been saying what I've been saying a little bit, that there's still just a lot of things that we have to get to come together before we really see that recovery. That, while a tweet might take us temporarily up, we need to see some of these other underpinnings, like you've talked about, the tectonic plates underneath the markets, get themselves aligned a little bit better before we see takeoff.
That's the word. Things are not aligned right now. So naturally, a person with a wealth of experience like Jamie Dimon is going to say, I don't see all the things aligned here. Therefore, I'm a little concerned about this. I'm a little concerned about that. And, when I look at the Fed, you've got a lot of comments. Everybody wants to hide behind uncertainty. The
Yeah.
retailers you just
Oh yeah,
mentioned.
the Fed by the far the most.
I mean, look at Bostic all of a sudden coming out and saying, I'm hearing from a lot of corporates that it's uncertain times and that they're concerned. I mean, come on, Fed, do your job. All right. You have the other Fed president, Daly, and then and Hammock both stating that now they see growing concerns about the U.S. economy. I mean, like, what? How long have we been chirping about this? The growing concerns, right? So everybody wants to hide behind uncertainty. Things are not aligned. So when things are not aligned, everybody's like, well, I can't really make a forecast here. Well, what happens if the people that are making the things come unaligned? What about if suddenly they start coming back into alignment? And this is my thesis. Everything is so out of kilter right now. The models that are trading have no clue from a historical look back, because a model looks back in data to make a decision forward. But the data backwards does not align with any of the conditions in today's
yeah, exactly. You just nailed it. It's so important. And that's why we're seeing this, chop, chop, chop at the open when the algos kick in on the equities. They can't make up their mind. They're trading scared, it almost seems like.
Exactly. They're shooting into the dark just like everybody else on a daily basis. So this is my point. If we begin, so I have a big capital if. We begin to see some alignment returning, and that would mean, let's define it. That means trade agreements. That means lowering of some rates. That means inflation is ebbed and a sideways movement at worst, not going sharply higher in a month-to-month basis. If we begin to see geopolitics soothing, peace agreements in the Ukraine and Russia would be big. Iran coming to the table would be big. U.S. budget getting passed would be big. If the alignment begins to fall in place, then everything that trades is out of kilter and underweight. And that surge in just coming back to a neutral positioning will be enormous. And that's,
I will say though, man, it sounds like you're playing Jenga there. There's so many different parts. This isn't just, we're not playing tic-tac-toe anymore, trying to get 2 or 3 things in place. We're back in this 3D world of Jenga where all the pieces need to kind of come to order for it to work. And without them all coming, it's going to be, and I think you just nailed it. I think we're going to see them, nothing's going to happen all at once, but we'll see one, then maybe the other. And what will happen is there'll be ebb and flows as one or the other start to play out. And that's what we're seeing, right? The ebbs and flows. So there's trading, we're starting to see some trading ranges you can trust on some things. And, that's the way I feel. I also have one for you. USD CAD could be a little explosive today with crude levels, right? That was something that got ticked off as I was talking to ChatGPT and Grok this morning.
That's right.
Prepared for you.
And CAD is an interesting one here because you've got a weakening economy. You've got a new political leadership, but not in the majority. And you've got a currency that perhaps wants to be weak, but is yielding some strength versus the dollar, reflecting the overall market conditions. And the last thing that Canada would really need is a strengthening Canadian dollar, weakening US dollar to really complicate things. So that's one very carefully to watch presently here at around the where are we?
138.7.
Yeah, so this is kind of below the points that I would think is comfortable for Canada.
Right.
So I'm not so happy if I was the central bank in Canada at 138.70. I would be a little bit better off in a 139.140 handle. So that it's something to watch. There's a lot of play. MEX is another one. It's strengthening here at a point when the when Mexico is trying to make 0.5% interest rate cuts, presently at 8.5%. We were over 10.5. and Mex is, having some economic difficulties too. And as the currency appreciates, the stimulus from lower rates is getting taken away. So very interesting situations here. And back to the Jamie Dimon comments, we're out of a line. He sees it. He's making his warning signs. I'm saying the same thing in the sense that without this alignment, and let me emphasize to the viewers, 40 plus years of trading, I've never seen a market with this many, let's call them dislocations, geopolitics, interest rates, central banks, budget problems, you name it. There are so many, loose ends that have to come into alignment. And I don't think I've ever seen the market like this ever in my career. So what I'm trying to say is the computer models have nothing to trade off of. If these things one by one begin to come back in line, you need to start watching the currency, because that's where you're going to see if the dollar begins to turn and ebb back up, specifically in the yen and the euro, then you're going to see a surge in the markets. But until we start seeing an alignment, it's trading ranges and the downside is vulnerable.
Yeah, and I think you just said that, and for our viewers that maybe don't understand, there is, as the dollar strengthens, other people from around the world want to put their money into dollars and then use those dollars to buy stocks. So they buy U.S. stocks with U.S. dollars usually, and that would be
especially given the underweight nature that
they are now. That's what I was getting towards. Yeah, is exactly. So that shift, it would be huge, like we saw. When the opposite of that, when there was the rush into Japan, when there was the rush into, some of these other areas as people got nervous and looked for safe haven, we'd see that same, move there. You had mentioned, Australian dollar and New Zealand dollar, they would probably be the biggest beneficiaries of some of the geopolitical tension running out, right?
That's correct. And, that's an interesting one. I'm glad you brought Australia up, because you're right, it is going up. And if the world begins to recover, Australia is what we would typically refer to as a resource currency. They, and also watch China, because they are one of China's biggest resources, exporter to China. The interesting thing about Australia, there is a real negative that's out there right now. And I'm actually quite shocked that we're not seeing a weakness in the Aussie dollar. So this is one that I will highlight. I want to put on the burner here for you. They are making a new move to tax unrealized capital gains.
Capital gains, yeah.
This is probably one of the most reckless policy decisions I think I have ever seen in my life, that you're going to tax people because a stock has gone from A to B and you've made money, but you've never realized that money. But yet you have
it goes back down. You pay the taxes. They're not going to give you that money back, I'm sure.
And what about real estate? Are they going to go that? That is, so what would this lead to? It would lead to a obvious capital flight out of Australia. And so this is one, hasn't passed yet. It is being proposed, and the government is proposing it, is in the majority. So because they just had an election. So watch this one carefully. This could be an ugly situation out there that unfolds rapidly.
Yeah, do you see too? I think we're going to see even more divergence in the rates that, from around the globe here, because it doesn't look like our Fed is getting ready to do anything.
And hence, what I've been saying for 2025.
Yeah.
Currencies is where it's going to be at, because volatility is back. And I say that in the context of having traded since the 80s, and throughout the 80s, the Plaza Accord, the Louvre Accord, where the central banks, the G7, in fact, there's a G7 meeting going on right now, and the viewers should be very careful. Make sure that you are checking headlines out of the G7 meeting, because the United States is in there, and you can bet everybody's going, what are you doing? You're destroying the world that
you think the trade representatives having a fun day today?
Well, all the Treasury secretaries are there. And believe me, This is where all the world global coordination has come from. And they got to be sitting there looking at United States and going, what have you done? You've destroyed 30 years of coordination.
Yeah.
So,
yeah. It'll be interesting. So what else are you watching for, Steve? We got a few minutes left here. What do you have on the tack for us?
Well, interest rates will clearly continue to diverge, the tectonic plates underneath of the currency markets. And what's going to happen is each and every currency is like a magnet. And again, $7.5 trillion in a day. Each one is a magnet. One of them is going to draw a larger amount of the flows. Right now, the U.S. has not drawn any of it. It's all moved out. So what I'm watching ahead is it's a 3-day weekend coming up. The market has moved down. My suggestion would be everybody's going to hit the exit door and square up by Thursday afternoon and definitely into Friday before a 3-day weekend. When the markets are going down, the weekend risk is that something good comes out. If the markets are up, the weekend risk is that something bad is going to come out. Very simple. Keep it that way until we get more alignment on the fundamentals that are all out of kilter right now.
Absolutely. And I couldn't be more with you. As you know, that's how I've been playing it recently when I've seen everybody all super optimistic on Friday going into the weekend. My spidey sense has gone up, and I've been the contrarian in the room saying, something's not going to go right. And the opposite, when I've been Mr. Negative with the rest of the market on a Friday, you guys have pointed out the upward things that can come, and those have usually come. It really has been that exact sort of play out, hasn't it?
Yes, it has. And to the viewers, this is important that you watch this. Why? It's simple. Opportunity. Yep. If the things begin to align, the opportunity from these levels are incredible. Likewise, if things do not begin to align, then safe havens will continue to come into play and the markets are going to melt, not necessarily drop. The sharpness of the April drop is over. Now you're in, if you look at the last 5 days, look at how it's melting down. And that
right. I don't think we don't have capitulation. I would say to that, though, that we're close.
Yes.
Again, from what I hear from the retail traders, dip into my ears asking questions, is again the same things that we asked before the April capitulation. They're not asking me what stocks to buy. They're asking me, should they be buying anything? And that starts to scare me a little bit. Again, I have a pretty good reference point from that, from just, dealing with so many, retail traders between Twitter and Quasar and Prosper Trading and all that. And that seems to be the way.
Yeah, let me offer a suggestion there. You can be long, you can be short, or you can be square. Square means you're sitting on cash and looking for this opportunity.
Either way, right? Again, and as you guys know, I've been doing that every day. Steve's been staying long. I've been settling it up a lot more because I found opportunities to the upside and the downsides. When I wake up in the morning and I might have missed a 5, 6, 7% move on something, sometimes that move is the mean reversion just for it to pull back, like you and I talk about. That's the number one model for algos, and it's been playing pretty well for me, over the last few weeks. Some of the dips I'm looking at today, like RCL and CCL, they dipped yesterday, they're dipping again today. Do they give me a mean reversion? Any good news maybe going into the weekend, like you're saying? I know Steve's on a cruise, so he's spending lots of money there. Maybe they report that, the BigBeat effect is back in on RCL. But, that's what I'm looking at. And when I see these things jump tremendously to the upside, Chinese names today, especially WeRide, a lot of those, I don't trust Chinese names. I learned that from you early on at Quasar, because those reports aren't really beholden to the SEC when they come out and say stuff.
They did nudge rates down to 3% from 3.1. So that's another sign over there that, while we want to think about Chinese tech developments as being earth-shattering, their economy is a quite weakened state as they slip into the spiral of deflation. So, I leave you with watch probably the nearest positive that could come out outside of a peace deal with Russia and Ukraine would be a U.S. budget. If you see that on a Friday after the market close, you can understand there's going to be a positive surge coming on on Tuesday open. So, risk, the lower you go, the more risk is to the upside. The higher you go, the more risk is to the downside. Keep very simple. And cash is a position.
I love it. That's where I'm at now. Although my Bitcoin stack's moving up nicely, I'm very happy there. We didn't even talk about that today, Steve. 108. Looks like we want to head to all-time highs here. I thought we'd actually see a nice little retracement. It hasn't given me that opportunity to put some more money in here over the last few days. So, we'll see. King Dollar might be dead. King Bitcoin might be taken over. I'm going to shut off before you can comment. Mr. Flanagan, thank you so much. Like always, we will see you on Friday, and we appreciate everything you do for us here at Quasar Markets Live. Everybody, we'll see you in a little bit.